Okay, welcome everyone. We'll start our lesson 2. Today lesson will go through LO2, learning outcome 2. As you know me, my name is Anjum Seta. Thanks for joining this session. So we'll start our lesson 2. Okay, so during last lesson, we discussed about LO1, we discussed about different income, self-employed, corporations and all. Today we'll be able to calculate the taxable income, corporation tax, and prepare the corporation tax return, which will go through today lesson. Key focus will be. So please, if you have any question, you can ask, drop the email on anjum at ukversity.co.uk, and I'll try my best to get back to you as soon as possible. So we already discussed about aim of this unit. So please always good to reflect how much you know about corporation tax return. Okay, so please define the term, the period of accounts. We already indicated contents. We look around the financial years, taxable total profit, augmented profit. We can look around when accounting period start and when accounting period finish. So we look around the expenditure allowable in calculating the trading profit, plant and machinery capital allowance, which we can look around the property business income. We'll discuss about the relief on losses, especially under the corporation tax, and the income under loan relationship to the rules. We can look around the charitable gain, qualifying charitable payments. We can look around trading loss relief, calculate the corporation tax dividend, and we look around the penalties for the late return. That all will be in our discussion today. Okay. Corporation tax and scope of corporation tax, that's which we'll discuss, also, which we'll go through in a minute. Okay, so please, can we look just 2 minutes, please? Okay, guys, let's please look in a okay, as we mentioned, so look around the indicated content, what we're supposed to learn. We'll discuss about scope of corporation tax. We'll discuss about VAT, and we'll go through the key points in our discussion as under learning outcome 2. So please, when we go through the calculation, so make sure you follow the tax rule, please. That's the income tax. Look around the personal allowance. Please, also good to know And then please we look around the corporation tax, please. Uh, Car benefit percentage, electric cars, company benefit, the company van benefit scale, which is quite good to know. Individual saving, if we have rental incomes, we can look around the authorized mileage, capital allowance. That's the key, for corporation tax, please. 18% man pools, special pools, and then we look around the motor car, and the various examples, the rate of allowance, annual investment allowance, 100%, expenditure limit, and the state line allowance on the commercial structured building, cap income and relief, So corporation tax is the 19%. So we have the lower limit 50 and upper limit 250. So we can find the marginal relief. Upper limit minus augmented profit times by the standard fractions, and we can calculate, the total profit divided by. So that's, which we use the formula, which will look, the threshold quarterly installment can be, and value added tax, VAT, the 20%. You can register yourself standard rate. If your turnover is more than 85, becoming compulsory, 85 or more, it's becoming compulsory. So please, we need to be look around the penalties. If we so please, we need to be look around. So inherent tax, which we already mentioned, reliefs, capital gain for individuals, which we can look around. Annual exempt limit is 6,000. So that's which we can. Please, imply if you earning 1 to 12,500 is a 0%. If you're earning more than that, is a 12% NI contribution. And if we have income is more, it drop down to 2%. So employer 1 to 9,000 is 0 if you are earning more than 9,000. So employer need to pay 13.8% NI contribution. Okay, so employment allowance is a 5,000. We can look around 13.8, class one. We can look around the small profit threshold. These, we need to be look around, please. Okay, deliberately concealed, so penalties and the fine. So we already had a discussion who pay the tax, in the tax system, the resident, connection, domiciles. So we discussed about ethics, moral in our LO1 as well. So please, those we need to be look around. So in our lessons, we already previously we already discussed about dividends, rates, and all thresholds. Please, we need to be follow these CO2s, omission level, annual allowance, minimum allowance, yes, for the pension and income limit. That's, approved mileage for cars. So please, keep in mind all these. Okay, we'll go through now 2.1. Discuss, the tax laws and its implication, uncorporated and corporated business. And incorporated business are the corporation as a separate entity from the business owner. At the natural right, the controversy, the business owner and the incorporated businesses are the same. So owner personally be at all the result. Uncorporated businesses are usually, proprietor of the partnership. And the main difference between incorporated and incorporated businesses, the way owner should be business activity. So in incorporated business, protect owners, the liability might incur, running the business. With uncorporated business, so does not. If they default, debt, the payment the debt must be from the investment or not from the business owner personal property. That's, which we need to be. The same true with the loss. Again, the business, we can look around incorporated losses at the lawsuits with the corporation, not owner, responsible for paying up controversy, the business owner. The private businesses are personally liable for any debt, suits against their businesses. So that's, which we need to be look around the liability. Of course, under the company, we have a limited liability, but other we have the these we need to be look around. So the corporation, the lower tax rate, for individual, additional incorporation, deferred, taxes to the late date. So we, if the business qualify for the small businesses, it may qualify the small business tax deduction. Incorporation must be filed separately, and the business tax returns while unincorporated. So we need to be look around unincorporated businesses also have the some the flexibility when dealing the taxes. It can be personal tax credit which we can, incorporated businesses cannot. Also the owner unincorporated businesses we need to be used so we can look around the cost of unincorporated approach. So initial setup cost corporation is to lower as $60 or hey we can look around the other 50 pound and file article of incorporation fee depends on states, and annual filing fees to the government regulatory board which we need to be look around. The business owner may also pay the considerable fees to the legal help hire the lawyer, or we can look around the setup maintenance corporation. Additional incorporation must pay ongoing maintenance costs are including details record the statement preparing and the federal. This is for we can look around in the UK perspective as well. So in preparing the paperwork ongoing, of course we need to be look around the quarterly annually reports the government and regulatory. For VAT we need to be quarterly, and if it depends which scheme of your annual accounting, your cash accounting, your standard reporting every quarters we need to be look around. Paperwork we need to be make sure we other different between two unlikely the incorporated business or corporation carried out even an owner died. That's which we can, because unincorporated company must entity drop the new deeds or the transfer property. The corporation need to be issue the stake shares of the properties. We need to be look around. Corporation must remain transparent and report activity to the shareholders. Those are quite crucial which we need to be look around accordingly. Okay, so we can look around when the gain rise of the chargeable disposable asset by we need to be make sure all asset unless they exempt private motor vehicle, the government securities and qualifying loans we need to be look around. Please, I copy the link please here if you want to look around some examples so you can lead as you can follow as well, which we'll go through when we'll go through the assignment discussion. Chargeable gain from the companies are treated like any other the income of a company are included the corporation tax assessment. The company don't pay corporation gain tax. The question will be normally given the actual amount of the capital gain. Maybe sometime require the calculated figures below. All the gain must be aggregated. So if the capital losses are given and either the same period or the carry forward from earlier period, and these losses must be deducted from the aggregate gain and the net chargeable gain figure. Once the gain of the capital losses are deducted from the wrong income full marks. Of course, we're not doing the exam, but it's the exam point of view. It can be external exam. If you're doing F6 of ACC exam, of course, we're not doing it. We're doing IFA qualification, so it's only matter of assignment. So please, when you, for the tax purposes, always look around the residencies, the tie 183 days, the domicile, which we already had a discussion in the previous lesson as well. That's also quite crucial, which we need to be look around. Let's please we look the income inflated fund factory is approved for you the following information. We have adjusted trading profit before capital allowance. We have capital allowance, bank interest. We have the rental income. We have the bank interest received. We have 10% debentures, the donations, and dividend paid. So that we have to calculate the total the taxable profit for this period for the businesses, which we can look around the corporation point of view. So we have the trading profit 969,200 because it's all working pair, please. Yes, so less capital gain if we have the capital allowance, so we minus. So after minus, we have the profit 969,200, and then we have the property income and the trading and less, qualifying charities if you're giving. So total profit, taxable profit we have. So then we can look around non trading interest, the bank interest, debentures and interest we have, that's 52, and the less, bank interest, rental properties, which we can look around, that's 8, and 44 is the total. And then these, we can add them for the calculation purposes. And then please, let's, we can look around these, and that's, which we need to be. Then here is example 15-month period, so we need to be divide to the 12 because we can't do more than 12, but we need to be look around which financial year this falls. So that's, qualifying charitable donation, which we need to be, and we have the company bought, the plot costing, how much, and balance brought forward, which is a year allowance. So we can look around here, please. So we can look around first 12 months we have, then remaining, 3 months we have, so we can proportion it. Capital allowance, which we can calculate accordingly. Trading income less, we have the interest income, which is we can do the proportion because if they're deducted at source or any interest, so we can. And property income we have, and then chargeable gain. So please, you can total qualifying, the period which we can look around, qualifying capital allowance, which we can, and then we can find how much the trading profit we have. So please, on the next, we give all the working here, like the main pool asset, which we have the balance brought forward, the addition during years, we have the first year allowance, annual investment allowance, which we can claim full. Then we have, the, so we can say 25,000 and 20. So because the written down allowance is 18%, so we can find 18% of 20,000. So that's we have, so we can look around, that's we have, which will total written down allowance value, which will be carry for the next period, and how much we have now, that's which we can. And we can look around 16,400, 18%, and 3 by 12, how many months, that's which we need to be proportioned accordingly. So that's, which can be personal allowance, and then we can calculate accordingly. So please, this is if we have the tax losses, tradable income, other incomes gained, less the loss relief, which we can carry on, and we can qualifying period, and we can go up to 5 years, and that's, which is quite crucial, which we can go through. Like here, please, we have the trading losses or profit we have 2019, 20, and then 2021 we have 3 years. Yes, net trade interest we have, chargeable gain we have, and qualifying charity donation if we have. So what we can do, please, we can do some calculations, and I will included some examples here. So we can look around the trading profit we have. We have nil profit in 20, then 2021, non-trading interest if we have, income, so net gains we have, and total profit we have. So let's, if we have the loss, so because we have the loss carry forward, so if the 15,000 we have the year one, we do the carry back losses and carry forward 52, 62, and carry forward the relief, which we can do the remaining in, and then we have how much if we have, let's qualifying any wasted, which we can allow, which allowable charges, which we can, and the 4,000. So total trade profit we have in this case, and that's, which we need to be follow. Of course, nowadays we use the software, and software can be embedded the rates, which we can easily, we can do the calculation itself. Okay, so current year relief, which we look around the current, and then carry backward 12 months, which is 15. So loss carry forward 43, and the losses carry forward now is left nil. So we can look around how much losses we have, and we can make the tax, is the rule. So we can For the year 2020, Adam had the salaries, and during the year they made the personal pension contribution. And Adam sold an antique, table this year, and the gain, 20, and we can look around these trading profit we have in antiques, which we can look around, and for the years, Chester had the salaries and then incomes, because, if it, so we can look around Adam's annual income. We can less, the personal allowance, because that year was 12,500. So please, when you calculate, adding example, apply the new rate. Now we have a 12,570 basic rate, band extended, which we can look around now 37,500. Now we have a 37,700. So that's, which we can look around. And then please, if we need to gross up any, like, the, if been, so we can find full income that was, and which, we can now find how much is unused. So that's, which will be remaining will be. So Adams, again, if we have 9,000 less annual exempt amount of 12,000 is fully within unused, the basic rate. Then the capital liability is 900. So we have to go back and we have to apply the rates accordingly. So we included good few examples, please. It's good to review. So like in case of B, yes, so then allowance, you will see there other capital gain. So we can find how the, if you're a basic taxpayer, exempt limit of capital gain. So these, carry on changing. So please, we need to be look around the year rate, and that's, in case of Chester, we can, and we can calculate, their liability. So if we'll go further down, okay, so we can look around the tax liabilities. Oh yes. So accordingly, please, be. So in property income include, all the rental property income must be calculated on the accrual basis. Accrual basis mean we not do on the basis of you receive the cash, but we do the income and expenditure should be recorded in the accrual accounting. Yes, so it should be calculated, and it doesn't matter you receive or not receive the cash yet. So qualifying charity donation, and we can, any losses we have, so those, we need to be make adjustment accordingly. So please, keep in mind, dividend payable are not allowable deduction, and always, ignore when calculating the tax, and the dividend received are not taxable. However, the dividend from the non-associated companies, gross up, different group and subsidiaries, all, we need to be look around the prospective augmented profit. The figures, determine the rate of the corporation tax, never applied, amount. So we must, apply, calculate, augmented profit to determine the rate, but careful, then apply the rate of the rate to total taxable profit. Okay, so which we look around these in traded losses can be again the total income adjusted for the future profit that can be used, and the total income and the losses. So we need to be keep in mind, so please, I'll give you and show you the, we can pick, from the book, the latest example, adjusted profit we have, how much adjusted total income we have, maximum deduction loss set against the current years, earlier year set against the income other than the profit, does not, apply the losses set against again. So we have to look around the opening. We can use the first in, first out again, the income from the previous 3 years, maximum restriction apply, ongoing losses relief, terminal losses if you have within our lab profit carry back, so those need to be make sure we'll do adjustment. Okay, so you will see here is example, Joe's salary, saving income, dividend income, and during paid interest, for qualifying purposes, and employer deduct and pay why, so we can calculate. So total employment income, saving income, dividend income, total income, interest paid we minus, and then we look around the personal allowance. The year was in 2019. Now we have a 12,570. So please make sure you add, and you calculate, according to applying the latest rate. Only the rates will be changed. So we have now 37,700 is the 20%. Then remaining, if your basic taxpayer, it can be first 500, and the saving is exempt. And if we have more than that, so we can apply remaining 20% rate. And then if we have, if the dividend first, we look around 2000 exempt, and then we can look around remaining you pay. The rate is 32.5 was, and the taxable liability, if any tax deducted at source, and we can say how much is income tax is payable. Okay, so please, we included the example here. So please, you can copy the link and you can look around. We included here example of the profit before depreciation, less depreciation. So please, depreciation is not a allowable expense for our tax purposes. You have to add it back. So that's, accounting profit we have. Then in those plus, depreciation, we have to add it back. And then you can minus the capital allowance of not, then adjusted profit, adjusted trading profit we have, how much we have, and then what are qualifying plants and machineries, written down allowance, please. That's we need to be look around according to its main pool, first year qualifying are the gap. So these we can look around the pro forma, yes. So general pool, special pool, short life assets, then we need to be calculate accordingly, because that's the biggest thing for corporations to calculate, written down allowance and applying zero emission cars or whatever we have. So we need to be make sure annual investment allowance, first year allowance. So maximum, per year can be annual investment allowance. So that, can be, so we can calculate written down allowance 12 years. That's, if the previously first year can be 100% exam, accounting period less than 12 months, we can scale down and we can proportion it, cause we look around the CO2 emission level. So, and annual investment allowance. So please, that's which we included. We need to be make sure we proportion accordingly the first year. So I'll show you some questions, please. Motor vehicles, car, their CO2 emissions. So we included few examples to look around that will help you. Is it written down allowances, special pools are. So balancing allowance, which will carry forward the single asset or deep pools, which we can look around, and the business, if you're closing, how we can disposal, if you have a gain or loss, positive balances remain, or negative balances, we can look around the balancing charge, written down allowance, which we can look around an asset, an expected useful life less than or greater than 8 years. So please, again, we need to be look around each year, whatever, we written down allowance, annual investment allowance, first year 100% allowance, as we've seen in the previous example. So we can approach of the real assessment, because you're not doing assessment, please, what you need to do. I'll show you now. Give me a minute. I'll show you which is available on our Moodle page as well, which we use if you're using. Okay. So please, if you want more latest, you can as well on Open Tuition F6 of ACC exam of taxation. So if you're looking capital allowance and trading profit, so please look around the chapter, and there are plenty of examples which we can. If you're dealing with the capital gain for individual and businesses, please we've been given, and you've been self-assessment payments for individual. We corporation tax we deal, 133 page number page. We can chargeable again, adjusted and self-assessment for tax, the company. So please, quite good to look around and explore, deep dive into, because that is quite crucial knowledge which we need to be up to date, because tax is the things, of course, nowadays the software embedded as long as you can tell you how much is the tax, liability is outstanding and asking. and answering the question. So that's, is on Corporation 173 page. So which is available the document on our Moodle page. So if anyone can't find it, please let me know so I can send you this via email. So show you now. Scroll down to 173. Yes, guys. So if you look, so if you scroll down, so you will see now 173 page number. Self-assessment for company. So you can pick, the question for your assignment. Yes. So any example you want to, the compliance we need to check, discovery, penalty. Yes. So the, you can. And you can add it, please, example. Other than that, if you want, we can say ACCA. '24, because after 33rd January, and please, you will find plenty of examples here. Please, it's good to be look around when you're looking company, yes, assessment, property. So these are good few articles to look around for, and I'll put them, so we can look around ACCA. Articles. Yes, so that's so please, this one is 2024 Fun and Sec. And if you look at the example here, corporation, so you will find the corporation man pools, yes, special pools, examples, those are quite good to use, yeah. So you've been given the rates, you've been given the examples. Please, we can pick it marginal relief example and full calculations, please. That's quite good, to embed in your, and I can copy this and I can share with you via WhatsApp, and that's, help you, please, when you deal with, so that's, helping you. So because we are using now Finance Act 2024, so please, focus on this document. That's also help you. So please make sure, join our next lesson, which is we'll go through our LO3 and we'll do our lesson next Saturday between 3:30 till 4:30, and I dropped a message on WhatsApp as well. So please, follow accordingly. And hope, if any question. So I'll just, save this and I'll share with you the document which I've shown you. So that's quite good. A document to look around on our, will be available updated, which is because we are dealing now Finance Act 2024, and that's quite good to look around Finance Act 2024 instead of, so just a matter of, because only the rates change, we have to make sure we can apply the latest one. So that's all from my end, and thanks for attending today's lesson and listening this recording. And please, if you have any questions, feel free, drop me an email. Have a lovely weekend. Thank you. Bye-bye.